Welcome back. I'm Joe Elkier. This is Damian White. This is the Gold Spot. Damian, once again this week, we've got lots of fireworks. Powell's in front of Congress. I want you to talk about how huge of an opportunity this is right now as far as timing, just because what's happening and the powder keg that is really sitting there for precious metals prices as we head into the fall.
Absolutely. There is a lot of opportunity right now. The way that everything is lining up, I think, is really what's going to kick off. A bunch of factors are going to happen in the economy. So, I mean, everyone knows we have a lot of political tensions coming up in the next few months. We could certainly have some kind of an impact on all markets, gold and silver, and the equity markets. So we're starting to see a lot of froth in the equity markets. And as we get into these like crescendos of I don't know, opportunities right now where all the money is kind of on one side. But if you look and you dial down into what's going on with the actual economy, you mentioned Powell speaking in front of Congress the last couple of days. What everybody wants is lower rates. He's raised rates a lot. That's putting a slowdown on the economy, which is it's starting to affect. You're starting to see it in housing numbers, that's for sure. And what's also starting to happen is jobs. Job market, especially in like tech businesses, are starting to peel off. And now we're starting to see it in other sectors like restaurants. So it's starting to affect the economy. That's going to be the signal for the Federal Reserve to lower rates. When the Federal Reserve lowers rates, it is going to take the pressure off of the upward dollar, and it's basically going to be the all clear for gold and silver to go up. We obviously have the inflation, we obviously have the concerns geopolitically, and we obviously have too much money printing. But when they raise rates, it puts pressure on it. So that's going to be the all clear. That's most likely going to start either at the end of this month, which we're in July, or as we get a little bit closer to the election, the next possible opportunity for him to do it would be in September. So that basically will create the all clear for higher prices, and you want to get in before they start going up.
At the beginning of the year, the Fed they came out saying basically we're expecting 6 rate cuts. Before we even got 6 months into the year, that plan was out the window. So the confusion is obviously there for them, for the markets, for everything. I mean, what else can we draw from that?
Well, yeah, I mean, the street was anticipating a lot more rate cuts, and the Fed kept pushing it off. I mean, the economy was strong, and the inflation was really high, and still is. But they're trying to put a damper on that. But now the rate cuts that the rate hikes that they did are putting continual pressure. And I'll tell you what's going to end up happening. The Federal Reserve is going to do like they always do, and they wait too long to start cutting rates, and they wait too long to start lowering rates. Because these take months to actually soak into the economy. By the time they see the data-dependent aspect of it to be the all clear, it's already going to be affecting everything. So what we're talking about is the yield curve inversion right now, where the short-term rates are higher than long-term rates. So it makes this inversion. Every single time that happens, we lead to a recession. So we're headed towards one, regardless of what any economists are saying. And this has been the deepest yield curve inversion that I think we've ever seen in history. Okay, so what happens is the Fed is going to have to start cutting the rates. That's going to be the all clear for gold and silver. And then it's going to start, everything's going to start snowballing. The unemployment is going to start going up. And that's when the equity markets are going to crack. So you want to be positioned in gold before the stampede. We've seen this over the last couple of years. Every time there's some exogenous event like a pandemic, a regional bank failure crisis, when Russia started shooting missiles into Ukraine, every one of those events caused a stampede of people to run into metals, and guess what happens? Prices go up, but so do premiums. You've got to get in now. You want to start reducing exposure into higher beta assets, equities for sure, and you want to start transitioning, in my opinion, into hard assets, which is definitely gold and silver. The housing market is another hard asset, but that's starting to have some issues as well. You don't want to be jumping into housing at prices elevated like this. So to protect your money, you want to own gold and silver, and to buy it at low prices and capitalize on the increase, you want to start positioning now, because when this yield curve inversion flips, no one is ready for what is about to come down the pike. It's going to be something to be hold of.
The time is now. Go to our website, request information. We're here to help. You buy gold and wait. You don't wait to buy gold. Has never been truer than it is right now. Give us a call. We'll see you next week on the Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube or our Rumble channels. Also, comment below if you have any questions or if you want to hear us talk about something specific in a future video.